Hey everyone, Couch Investor here with another video for today. Today is going to be a special video. We're going to go over the Berkshire Hathaway meeting that occurred yesterday. Usually it's a yearly meeting with Charlie Munger and Warren Buffett, but this year Charlie couldn't attend the meeting, so it's Warren and Greg Abel. Now, I made a short summary, so obviously not everything will be in this presentation, but the full video will be in the description below. It's over 5 hours, I think. So if you have the time, it's very informative and very interesting, especially for the long term and for the short term investor today. So let's get started. The main topics of the meetings were the history of the United States and how it grew, etc., etc. The current market, obviously Berkshire, the airlines, oil, and he ended with a never bet against America quote. Now, general information. We first talked about Charlie. Charlie, by the way, is 96 years old. He says he's fine. He's now doing video streaming meetings. He then jumped and talked about some American history and how the country grew, etc., etc. But here in the general information, we talk about a couple of topics that couldn't be categorized. So he said that equities will outperform U.S. Treasuries over the long term. He also said that that's Benjamin Graham, the writer and one of the best investors of all times, taught him that stocks are partial interest in business. That's what I always say. When you buy a stock, you're basically becoming a business partner, so to speak, in that business. Now, unlike 08, 09, we are now in a situation in which we couldn't be prepared for, meaning in 08, 09, the problem started before Lehman Brothers went bankrupt, before the whole market crashed. Now, this year, in this crisis, if the coronavirus would not have, let's say, invaded the world, we probably would have been at all-time highs right now. Then he jumped and talked about some credit cards and buybacks and the PPP. So with credit cards, it says it doesn't make any sense to borrow money at credit card rates. He talked about a friend of his that asked him a couple of questions, that she has some money, she wants to invest, but she also has credit cards, debt, etc. And apparently she was paying between 12 and 18%. And well, he gave her the answer to pay back that debt as soon as possible, because there's no investment worth taking 12 to 18% debt on, because stocks and equity markets don't even return half of that. Well, maybe half of 12, yes, but if you have to repay someone 18% of your investment, it's not worth it at all. Then he went on and said something about buybacks. He said that buybacks is just another way to distribute capital. People can be stupid with dividends too. That's what I always say here when we go over the balance sheets. Share buybacks will continue to be a political football, and buybacks aren't immoral, but some are stupid. Obviously, if a company can afford it, fine. But if your balance sheet is already very, very small, if your cash positions aren't that big, you are doing something very stupid right here. Then he talked about the PPP. Is the right idea. You can't do it perfectly, but they are trying to do the right things. Obviously, in the current situation, nobody was prepared for it. So everything they're trying to do now to help businesses, help people, it's not perfect, but it's at least in the right direction. Now let's talk about Berkshire Hathaway itself. He says that our operating earnings will be considerably less than they would have been if the virus hadn't come along. Our three major businesses are in a reasonably decent position. These positions will produce cash. Now let's look at right here, cash and cash equivalent of 19 billion 158 million. A large position in US Treasury bills, $114 billion in debt, payable for purchases of US Treasury bills not settled at March 31st. That's $8.6 billion. Net cash and US Treasury bills, that's, well, you know the difference, $124 billion, which is a very, very big pile of cash that he has today. Some might say, why doesn't he make any investments? He said that at the time there is nothing really that is interesting him to buy at the current moment. Does that mean that he's waiting for the market to crash even more? I don't know, because in my opinion the market was pretty low over a month ago. So I don't know. Maybe he missed his opportunity. Maybe he's waiting for something specific. I wouldn't know. But he continues and saying that you have to be prepared if you buy a stock to have it go down by 50% or more. He said that because, well, there were 3 times where Berkshire stock went down by 50%. And if you had made that investment with a loan, or you went into debt for that investment, you would have been cleaned out by that, because most people will have panicked, and if they sell it, they have even less money to repay their loan that they took. So every time you make an investment, think of it like this: if it's going to be for the long term, you have to have the stomach to see it go down 50%. I have one stock in my portfolio. It's called Luckin Coffee. I've made a video about this at the very beginning, and it's down, I think, 80% or so, and trading has halted already almost a month right now. Did I sell it? No, I'm just waiting to see what will happen. For me, my money is already gone, so whatever happens, happens. Berkshire is almost certain to generate cash, continues with his position. We own treasury bills, like we saw right here. Very few of our portfolio business have required cash, which is very good to hear. Continues by saying that 5 years from now, Berkshire will be employing even more people, and saying that Berkshire businesses have not participated in any US government PPP loans, meaning they are stable enough to survive the current situation. Now, the most interesting and the most awaited part is Buffett talking about airlines. Well, he added the oil companies as well, and the whole situation about that, because airlines was a big topic when we saw that he sold Delta and another, I think, American. So I'll start with the first one. Buffett said he made a mistake in investing across the airline business. He believed airline earnings would go up across the industry, but like he said, he was wrong, and he added that airlines have too many planes right now. First question was about which airline positions were sold and how. So he answered there are certain industries that are really hurt by a forced shutdown. Obviously, airlines, hotels, cruises, etc. We have sold the entire position in the big airlines Berkshire owned. And then, well, Craig did a Charlie Munger there. I have nothing to add. As you can see here, they sold $6.5 billion worth of equity securities, which was most of them in the airline business. Continues by saying, if we owned all of an airline right now, it would be a very difficult decision about whether to accept continuing operating losses or not. how fast and how the aircraft manufacturing industry recovers is out of our control. Basically, he regrets taking those positions in airlines right now, but again, he says that today. I'm sure when he bought the stock, he was very happy with buying the stock at the price. But obviously, what happened this year was out of all of our control, and we couldn't even imagine uh, this kind of scenario. But I just want to go back to the point where he said that airlines have too many planes. In my opinion, if airline, well, let's say Delta and United or American, one of those three will propose a merger with one of the other, I think that would be very interesting uh, to both parties, because I agree there are too many airlines in America and there are too many planes on the ground right now, which means they are losing tens of millions of dollars because, well, nobody's flying anytime soon. Then he goes and talks about the oil industry. So when you buy into a huge oil production company, how it works out mostly depends on the price of oil and less on production. The Oxy commitment was attractive at prices that prevailed. It doesn't work at $20 a barrel. Obviously, it does not work at $1 a barrel or at negative numbers. Production of US oil will drop significantly, he said. If these oil prices per barrel prevail, there will be a lot of bad debt associated with energy loan. Given that reality on debt in the oil industry, you can imagine what will happen to the equity holders in the oil production companies. Again, a lot of people don't really realize that those oil companies, well, like he said, depend on the price of oil. If the price of per barrel is $50, great. But like we see today, if it's suddenly sub $20 or in the negative, we have a huge problem. You can produce as much oil as you want, but if the price per barrel is not in your profit margins, well, you have a big problem. And then to conclude, he's talking about the current market and the Fed. Um, Start by saying, I don't believe anybody knows what markets are going to do tomorrow, next week, next month, or next year. Anything can happen. Nobody knows what's going to happen tomorrow. Again, pointing out that you have to invest in the very long term. Obviously, in the short term, the market can be crazy. I'll jump to the last point right here for to make my point. Buffett pointed out that Mr. Market is a type of how do we call this? I know it's a type of poem, or not really a poem, but in Benjamin Graham's book, The Intelligent Investor, he says that Mr. Market is not only bipolar and drinks too much alcohol, but for the second time today, he noted that he might smoke pot. This weak consumption appears to be a new attribute associated with Mr. Market. That naturally raises the question: sativa or indica? Those are two sorts of marijuana, I think. Then he goes and praises the Fed a little bit. The Fed acted in mid-March, on the 23rd to be specific, in a huge way that enabled things to play out the way they have. Businesses who raised cash in late March should write a thank you note to the Fed. Um, Again, I agree with him on that point. He says negative interest rates are the most interesting question in economics. We're facing a period where we will test whether the world can continue like this or not. And then he said that he did not expect us to be in negative interest rate, but expect us to be in it for a little while, in well going forward. And then he ended the meeting, and I'll show you a little clip. Hopefully, I won't be copyrighted for it. But that's overall a very short summary on everything he talked about. Um, Obviously, he's very positive on the American economy, and we can see why, because history tells us, well, if you bet on America, you're probably going to be a winner in the long term. But yeah, that would be all for today.
There's all kinds of possibilities, but I definitely come to the conclusion after weighing all that sort of stuff, never bet against America. So thanks.